George Soros, thank you for being here.
Pleasure.
Appreciate it. The theme in Davos this year is the new reality, and you have said that the efficient market hypothesis has failed, and you're saying economists have to find a new way of understanding the financial markets in this new reality. Explain what that new way is.
Well, the fact that markets are not necessarily tending towards equilibrium, that they're just as easily producing bubbles as equilibrium, is what you have to come to terms with, and that requires a whole new approach, because the theory has been effectively proven to be misleading. So there's this new Institute for New Economic Thinking, which has taken off, and tremendous interest in the profession, some new research grants, and there's a new one institute set up now at the London School of Economics,
right,
in which and the Central European University, in which I will actually be a protagonist, because I have a theory which I proposed nearly 20 years ago, in fact more than that, that has now proven to be maybe more relevant, but it needs to be developed. So I'll be working on it.
And explain the theory for us. Obviously, that the old system in your mind of thinking of economists isn't the correct one in this new reality.
Well, you see, the economics try to imitate natural science, but there's a fundamental difference that in economic and human events, there are thinking participants, and the participants' understanding of the situation in which they participate is inherently imperfect. I can explain to you why, but it's too complicated. No need to go there. At any rate, so you've got imperfect knowledge instead of what is assumed to be a perfect understanding of the situation and what the best policies are. And that applies both to market participants and to regulators. So you had, say, free markets in the 19th century,
right,
and they collapsed because of imperfect understanding. So you turned to the state, and you had socialism and depending on the state to regulate everything. But then their understanding is imperfect too. So now you have to come to terms with living in a world where both the markets are imperfect and the regulators.
This new reality is a bit terrifying in the sense that human imperfection can have severe impacts. What is the one outstanding risk that you see to this global recovery? What unnerves you?
Well, the main problem is that you have a global markets, but you don't have global regulation, and you need, obviously, unregulated markets break down. We have seen it. So you need regulation, but then how do you get the different governments with different national interests to work together?
But it hasn't been solved. We have Basel III and we have Dodd-Frank in the U.S.
Right, that's right. So you've got different standards and different interests, and particularly you've got differences between China and the United States and Europe. Three major players and three very different approaches.
You've said that inflation in China is actually helping fuel the recovery, or the recovery of the equity market, at least in the United States. Right.
Well, you see, we were pressing the Chinese to revalue the renminbi, which they refused to do. However, you now have wage price inflation,
right,
which is basically having the same effect of increasing the cost of imports. So you now have a little bit of imported inflation in America, which is actually very healthy for the American economy, because without it, the burden of debt was getting heavier and heavier.
Sure.
And you needed quantitative easing, because with prices not rising, you couldn't stimulate the economy through monetary policy. Now that you have inflation, and you still have quantitative easing, you actually have now negative real interest rates, which is very stimulative for the stock market.
For the United States economy, outside of the stock market, the jobs crisis in the United States, back in, I believe it was October, you said the United States really needs more stimulus. Then we had QE2. Is that enough?
You actually need some fiscal stimulus, because you still have a lot of unemployment.
So we need more.
You don't want to live with unemployment where resources are unemployed. It's a real waste, because you then have to pay unemployment benefits.
Sure.
Instead of putting people to work in something that actually is productive.
So another government stimulus is needed?
Yes, but it's not possible
politically.
Politically, it's not possible.
Because of the hype over the deficit.
Right, but quantitative easing will probably not be necessary after the current round is up. And then interest rates are liable to rise and choke off the recovery. So right now you are in a sweet spot in the American economy.
In a sweet spot?
Yeah. This is about as good as it can get, given the
with
constraints.
almost 10% unemployment?
Well, that's why I think you would still need further stimulus, but that is ruled out. And in the next year or so, you'll have tremendous pressure on the states, because there'll be a resistance to any increase in taxation.
Sure.
And therefore you have to reduce expenditures and renegotiate with the unions. And that is going to add to the unemployment.
Do you think as a result of that we will see a bond market crisis in the United States? Is that an overblown concern?
That, I think, is an overblown concern, but you're going to have higher prices.
Yeah.
I mean, higher yields on bonds.
Turning to Europe, you've said that the recovery in Europe is going to be twofold, with Germany driving ahead and the southern tier falling deeper into a recession.
Yeah, and that is now the result of the euro problem.
Right.
The euro was supposed to bring about convergence, and it had the opposite effect of creating divergence. And the euro crisis is about to be resolved.
So the euro will survive?
There's a commitment to make the euro survive. It's now recognized the euro is here to stay. However, the current form of supplying additional funds for rescuing countries will result in a two-tier Europe.
With a bailout for the southern tier?
A fast lane and a slow lane.
Sure.
And the creditors are going to push ahead, and the debtors are going to sink. And that has very serious political implications in the long term. So I've been advocating that since you can see this problem now, why not actually deal with it? And that would require two things. To make the rescue package available to inject capital into the banks if they lose a lot of money because the other measure that you need is to renegotiate the debt, extend the maturity, reduce the coupon, and then the value of the debt would fall, and some banks might get into difficulty. Right now, the authorities are determined not to renegotiate the existing debt, but only the new debt that will be issued after 2013. And I don't think that the markets are going to give them the leisure to wait for that. And I think Ireland is going to press the issue.
Ireland.
Because the Irish basically got a raw deal that they had to accept the responsibility of the debt that came from the banks losing a lot of money. And clearly the bondholders of the debt of the banks ought to take a cut. And I think the Irish are going to elect a different government that is pledged to do this, bring this about.
Finally, I know we're running out of time, but you made headlines here in Davos saying that the UK's austerity program will prove unsustainable, that it could push the UK economy back into recession. Some of those headlines, you argue, have been sort of misconstrued. Can you explain what you meant by that?
Well, I honestly don't understand how anybody can expect to be able to reduce, cut government expenses as severely as they currently
81
announced.
billion pounds.
Yeah, at a time when the private demand is under pressure as well. Without causing a recession. So I'm making a purely theoretical point that this is not possible.
What's the solution? What should David Cameron and his team do?
Well, I think he will have to modify the plan as he goes, as the results come in.
George Soros, thank you.
Pleasure.
Thanks so much. I appreciate it.